Hi friends, Simit here from InformedTrades.com. In this video, we're going to take a look at a trade placed by a member of our community, DrebG, D-R-E-B-G. We're going to look at how we identify this scalping opportunity using looking at candlesticks and understanding sort of what they mean and how he was able to get in and out of that trade profitably, quickly, and at very low risk. If you have any questions, you can always ask us over at InformedTrades.com. Thanks and enjoy.
Okay, so the first part of this strategy is to identify a pin candle. Basically, a pin candle is a candle with a long wick. This is also referred to as a hammer pattern or a hanging man pattern. Basically, a pin candle can be used to sort of reveal the psychology of the market. If you look at the chart that's on the screen right now, which is a 15-minute chart of the pound Swiss franc currency pair, you'll see there's an overall downtrend of sorts. If you look closely, you'll see there's a 200 moving average in the top right that's trending down. And we also see a pin candle. So basically what happens is on the right side, you'll see the pin candle. The market shoots up, but then comes right back down, which shows that the bulls tried to push the market up, but the bears just brought it right down. That sort of can be our cue that the bears have the upper hand in the market. Now, based on this, what we can sort of look for, or what DrebG looked for, is a 50% retracement. So, the market went up, and then the bears pushed it right back down. Now, if the bulls can try to push it back up again, and maybe they can get half the way up the wick, that's an opportunity for a bear to short at a higher price. And that's pretty much what happened, or what DrebG did in the trade right there. Got in at when the next candle went back up the wick, about half the length. That was the entry opportunity to get in short. At the same time, a stop loss was placed right above the simple moving average, which you can see on the screen now. So basically, risk is pretty limited here, which is definitely something that makes for a good trade, or risk reward in that sense. Basically, about 18 pips was risk, from 18 pip distance from where the stop loss is placed, from where the entry order is placed on this 15-minute chart. Okay, so now we're in the trade. We have our stop loss in place. So now the question is, when do we get out? Well, there are a few things we can look for. One is price action. If you'll see, there's a large bullish candle. That might, when we see a candle like that, that can be an indication that we may get a similar move again on the downside, or that similar gap. So maybe we will go, just as that big candle was bullish on the upside, we may get a similar candle or a similar 2 or 3 candles that get that whole move to the downside. So that's something we can think about in terms of an exit point. We also want to look at moving averages. If we see a commonly used moving average, that could end up being a support point for this trade and our cue to exit. Third thing to look at is smaller time frames. So in this trade, we're looking at a 15-minute chart. This is an example for day traders who are sort of in and out of the market very quickly. But if we look at a smaller time frame, like a 1-minute time frame, then we can do something like, where's the moving average crossover on a 1-minute time frame? That can sort of give us an indication that all right, maybe momentum is shifting. Maybe it's our cue to get out. And that's what DrebG did in this trade here. He looked at a 1-minute chart, saw a moving average crossover on that chart, which is like, all right, the bulls tells us that the bulls are gaining some strength, and that's the cue to exit. Basically, we always want to think about risk and reward as well, or at least, I don't want to say always. That's a very common strategy. It's textbook wisdom, you could say. So 18 pips were being risked, and DrebG got out with 29 pips. So that's a favorable risk reward. It shows good profit targeting and risk management. And that's basically a winning trade right there. In and out pretty quickly with a nice profit. If you have any questions, as always, join us over at InformedTrades.com. Thanks and take care.